Hello friends, we are going to discuss in this video common mistakes to avoid while filing ITR for assessment year 2024 to 25. The Income Tax Department has reminded taxpayers to file ITR for AY 2024 to 25 or FY 2023 to 24 by July 31st, 2024. Salaried individuals have also received Form 16. Filing income tax returns, or ITR, is an essential annual task for every taxpayer in India. Despite the streamlined e-filing process, many individuals still make common mistakes that can result in penalties, delays in refunds, or scrutiny by the Income Tax Department. To ensure a smooth filing experience for the assessment year 2024 to 25, it's important to be aware of and avoid these common errors. One of the most frequent mistakes is missing the ITR filing deadline. For assessment year 2024 to 25, the due date is the 31st of July 2024 for non-audit cases. Filing late can attract penalties and interest on any unpaid tax. To avoid this, set reminders well in advance and ensure all necessary documents are ready before the deadline. Next one is incorrect personal information errors in personal details such as PAN number, name, address, or bank account. Information can lead to complications in processing your return. Double-check all entered information to ensure accuracy. Any discrepancies can delay refunds or cause your return to be flagged for review. Next, most important mistake could be selecting the wrong ITR form. Choosing the incorrect ITR form can lead to rejection of your return. There are different ITR forms for various types of taxpayers and income. For example, ITR 1 can be used for individuals with income from salary, one house property, and other sources up to Rs 50 lakh. Or ITR 2 can be used for individuals with income from salary, more than one house property, capital gains, etc. So, understand which form applies to your situation to avoid this mistake. Next, important that not reporting all sources of income. It is essential to report all sources of income, including interest from savings accounts, fixed deposits, rental income, and, well, any other income. Failure to do so can lead to penalties for underreporting income. So ensure you gather and report all your income sources accurately. Next one, ignoring Form 26, AS and AIS. Form 26AS and the Annual Information Statement, or AIS, are crucial for cross-verifying the income reported in your ITR. These forms contain details of taxes deducted at source, advance tax, and self-assessment tax paid during the year. Compare these statements with your records to ensure there are no discrepancies. Don't do this next mistake, that incorrectly claiming deductions. Claiming deductions incorrectly is a common error. Make sure you are aware of the deductions available under sections like 80C, 80D, 80G, and so on, and claim only what you are eligible for. Keep the necessary documentation to support your claims in case of any queries from the tax authorities. Next, keep in mind, after filing the ITR, it is crucial to verify it within the stipulated time frame. An unverified return is considered invalid. You can verify your ITR electronically through methods like Aadhaar, OTP, net banking, or by sending a signed physical copy of ITR-V to the Centralized Processing Center, or CPC. Next is overlooking advance tax payments. If your total tax liability exceeds 10,000 rupees in a financial year, you are required to pay advance tax. Failure to do so can result in interest penalties under Sections 234B and 234C. Calculate your tax liability in advance and pay the necessary installments to avoid this mistake. Next one is incorrect computation of capital gains. Calculating capital gains, especially for properties and investments, can be complex. Ensure you consider the cost of acquisition, cost of improvement, and indexation benefits accurately. Miscalculations can lead to incorrect tax payments and potential penalties. Last but not least, that not keeping records. Maintain thorough records of all income, deductions, and tax payments for at least 6 years. This documentation is crucial in case of any scrutiny or reassessment by the tax authorities. So my friends, keep in mind that filing your ITR accurately and on time is essential to avoid penalties and ensure smooth processing. By being aware of and avoiding these common mistakes, you can streamline your tax filing process for AY 2024 to 25.